And welcome to my weekly real estate market update. I hope you're having a fantastic week. This week, as always, reporting on the property market, and I'm looking at property prices, what we've seen over the last month, the last year and the last decade, and what we can expect moving forward as well. So as always, if you're interested in having a read of the articles I write, I put them up every Thursday at martinlitzy.com.au, so you can check them out there. So looking at January figures across Australia, the average dwelling price growth has been at 0.4%, which is actually slightly up on November and December last year. So it looks like that's the sort of momentum we'll expect to see over the next 6 to 12 months, in my opinion at least. Last year, we saw property prices across Australia rise by 8.1%. That's on an average, of course, and over the last decade, 68%. So markets perform differently around Australia. So at the moment, we're seeing the likes of Brisbane, Adelaide, Perth performing very well. With the likes of Sydney and Melbourne, they're flattening out now, and that's certainly skewing the figures for capital city price growth, at least anyway. Regional areas still seem to be outperforming capital cities, and potentially that's because of the flattening rates of growth in the likes of Melbourne and Sydney, but it's also because of affordability. So the northern areas of the east coast of Queensland, regional areas in and around Western Australia, South Australia, performing very well. So 1.2% increase in the last quarter compared to 1% in capital cities as well. So that's the price growth figures at the moment. So looking across the different markets in Australia, it seems that lifestyle and affordability is still the draw card for those bigger growth areas, whereas the capital cities are slowing a little bit with supply on the increase, and that's particularly in the likes of Canberra, Sydney and Melbourne. Brisbane's still outperforming very well to a lot of the other capital cities around Australia, and I think that's because of the upcoming Olympic Games, and there's a lot of growth activity in the city as well there. That's pushing a bit more demand into the regional areas around Queensland, so we can expect that to continue throughout the year. Now, very exciting news with consumer confidence probably getting bolstered by this decision. The RBA did decide to hold that cash rate on Tuesday at 4.35%. Now, it's all expected that they will ease back that cash rate later in the year as well, and I've reported this in the past, the vlogs I've done recently. If that cash rate does ease back towards the end of the year, that pent-up demand and the shortage of property availability will likely bolster or boost by competitive activity in the marketplace. Looking forward, we're looking at a 5% increase in property prices over the next 12 months. Now, that's an average consensus across Australia, so some markets will outperform others as well. But 5%, not a bad place to put your money. If you bought a property at $1 million now, you'd be at $1.05 million in 12 months' time potentially. So great way to invest your money, in my opinion, into property. If you are looking to buy a property or if you're looking to sell, give me a call. I would love to help you. And I hope you've enjoyed this week's real estate market update. Have a great week ahead.